All right, guys, welcome back. Well, I'm not going to sugarcoat it. Right now, the SPACs are getting crushed. This isn't exactly the type of video that's fun to make. I mean, I would much prefer talking about all of the opportunities. And, back a month or two ago when everything was going up, it sounded like great. This was the gravy train. But now, if you guys look at it, this is my spreadsheet where I track a couple of the SPACs, right? Some of the bigger ones. And as you can see, almost everything is down. There's literally no momentum and they're getting crushed. So currently it's very bleak for SPACs, right? And if you guys remember, a couple weeks ago I had made this video talking about the market struggling and do this now. And I was really telling people to start looking at their portfolio and see where the weaknesses are, like for their SPAC portfolio especially. Try to cut some of the ones that had a lot of room to drop. And I know that some of you followed it. I mean, I re-engineered my portfolio to where if everything was going wrong right now, I had about $5,000 that I could lose. After that, I would be protected by the net asset value of the SPACs. But even then, in that 1 month since September 22, I'll be honest, I'm down 2,500 on them. It's just not going well right now. So the question today is it time to get out of SPACs? And what do we do? Like, what's the new strategy now moving forward with them? And as usual, please like and subscribe. It really helps the channel out. The algorithm for YouTube is very capricious, so you have no idea how much this helps. All right, guys, before I get into how to handle the current situation and if we should get out of the SPACs and what I would do and all of that, let's take a quick look at what's going on with the general economy and then the actual SPACs that merged in the past month or two. And then what can we learn from this? Well, if we look at the SPY, which tracks the S&P 500, as you guys can see, I mean, yes, it's down a little bit, but overall, over the past month or two, it's been trending mostly sideways. Of course, there's been some volatility, but as you guys can see, if there was a correlation between the general economy and the SPACs, we could expect the SPACs to be going mostly sideways, right? There was this peak over here, and now it's kind of between where it was at the peak and at the bottom here. So this is what we should expect if there was a correlation between the general economy and the SPACs. But when we look at the SPACs, whichever we look at, they're almost all significantly down over the past month or two. It all started with Nikola. As you guys know, they signed that agreement with GM. Then there was that report from the short company, or that did their short report, and then it started to go down. And then now it's at $21. So that's what kickstarted it. People started to have a lot of doubts about the SPACs and started to look at them a little bit more critically than they did before. Then we moved on to VLDR Graph. And again, this is a company that was above $30 at some point, and it just went down, right? Now it's starting to find its footing, but for a long time, as you guys can see, it went straight down. So there was a lot of talks about this company had too many pipe, right? The pipe was going to sell off, and this spooked off a lot of investors. But again, if we take it into the bigger context, you can see that there's just a huge crisis of confidence in the SPACs. Then we move on to Multiplan. Multiplan is another different case, right? This is a company that never had a lot of backing. It sat close to the $10 range for most of the SPAC life, and then as soon as the SPAC merged, right, it started to go down under the $10. And again, now it's starting to settle at about $7.50, $8. Right, you guys can see it's starting to find its footing now. But again, it dipped way under the $10 floor from the pre-merger. Then we had HYLN, peak at $58. Since then, it's going straight down. And as we explained before in a previous video, currently the last line of defense is $18. Different company, TTCF, which is Tattooed Chef, right, which was previously FMCI, another company that I love, but the difference with this company is that they have earnings, very, very strong earnings, and I plan on making a video about it tomorrow. I discovered something new today that I find very exciting. But if we go back to this video, right now, as you can see, it's down another 11% today, and it was peaked at $28, I believe. And since then, since the merger, it's just going down, and it seems like there's nothing holding it up. Now, a different SPAC. I know I'm going through many of them, but it's all relevant. This is SPAQ, right? Spartan, that's going to be Fisker. Now they're stuck at $10, and it's very likely that after the merger, they're going to dip below 10. Now, one of the little exceptions is Ride, which is Lordstown. They're just merged and now they're trading for the first time. It seems like it's up a little bit today. And then if we look at UTS is the company mostly because it's one of the most mature company and it has a lot of institutional investors. This is one of the company that has held the best. As you guys can see, it's been trending sideways since they merged. But overall, as you guys can see, ever since the Nikola fiasco happened, all of the SPACs have been trending down, right? There's absolutely no momentum. Maybe the only company that had a little bit of momentum still is IPOB, right? Mostly because there was that story about ARK Investment buying into them. And even then, right, as you can see, down 7% today. It's just a disaster. It went up and now it's going straight down. So this is the state of the SPACs right now. It's very bleak. But now what can we learn from this? Well, the main thing that I'm learning is that the $10, it's great before the merger. And as I always say, $10 is your friend. But after, right now, it doesn't look like it has a lot of impact. If you look at my companies that I recommended in my previous video, let's look at TRNE. This is one that I feel is well positioned to survive in the next couple of months. But again, it's almost at the net asset value, right? It's almost at what the money that they have in trust, so it has no momentum. HCAC, which is a company that you guys know I love and feel has the best risk versus reward, 1034. It's at the minimum basically where you can redeem your shares and get more money than what the share price is. And then the other one I wanted to look at is GMHI. This one is a little bit more risky. The reward is high, but as you can see, again, it's almost at $10. So it seems very likely that a lot of these are going to dip under $10 after the merger in the short term in the next couple of months. So this is one of the things that we have to factor in right now is that $10 is great before the merger, and one of the reasons why I like to invest in these companies that aren't going to be merging in the next month or two, right, until after the election, is for that safety. But again, in the short term, like it's very different from a month or two ago when you could expect to get those short-term profits. One of the shifts that we have to take into account right now is that you have to think about it more like a venture capitalist, right? One of those VCs that invest thinking, well, how's the company going to do in 3 years, 4 years? So now instead of looking at the short-term profits, we have to go a lot more into the fundamentals of the company and the total market and see how they'll perform over time, not just over the next month or two. The second part of the video, how is this current situation going to impact our investment strategies? So you guys know a little bit about my investment philosophy when I'm thinking about these SPACs. There are two main components that I'm looking for. The first one is, do I like the big idea? Do I believe in it? So the big idea is, what kind of industry are they in, and do I see it growing in the future or shrinking? You guys know that I really believe in the expression rising tides raise all ships. If it's a company that's in a growing industry, organically, naturally, it's going to help it succeed. So if we think of 3D printing, again, going back to TRNE, where do I see this going in the future? Do I believe that there's going to be more 3D printing in the future, which is going to help TRNE, or is there going to be, like, is this a shrinking market? Well, to me, it makes sense that it is a growing market, and that's going to help them as they develop their newer products, their new technology, right? So they should benefit from it. We can do the same exercise with electric vehicles. Do we believe that this is an industry that's trending up or down? Everyone on my channel is probably going to believe that this is an industry that's trending up, and in the future we'll see more electric vehicles. Conversely, right, you can do the same exercise. Well, that means that traditional car makers that aren't up to date with the electric vehicles or aren't paying enough attention to it, well, I would be bearish on them, which is the case. So now the second component is very important, if not more important than the big idea, is the execution plan. Because it doesn't matter if you have a great idea and you believe in it, if the company just is not able to execute on it and eventually turn a profit, they're always going to be at best, right, stay where they are. They're not going to really grow quickly. So that's the second aspect, is the execution plan. Is it a company that you can reasonably expect is going to grow their revenues over time? Is it a company that reasonably you can expect is going to get a profit? Then do they have positive catalysts, right? So as we talked about in some previous videos, companies like Tattoo Chef that has great earnings, well, every couple of months when they announce their earnings, that is a positive catalyst. Same for TRNE or any of the other companies that we follow on the channel. Like if you can expect reasonably that they're going to have contracts and positive analyst ratings, those are all positive catalysts that are going to help the stock. They're not in industries that are shrinking where people are just going to have a negative opinion. If there was momentum behind the stock at some point, you can assume that when the tide turns, there's going to be momentum behind these same companies once again. So that's one of the ways I look at it. And then the third component, which is more time sensitive currently, is are these industries that are COVID resistant? So again, like this isn't going to be valid maybe in 5 years, but for now, I'm much more comfortable with an LCA that has benefited from the current situation, right, than I would be with OPS. You guys know that even though OPS might do great in the future, in the short term, I feel like they were very, very vulnerable just because of the fact that, restaurants aren't at full capacity. So that goes against them and it makes it a little bit more difficult for them, right? They're very close to the $10 also. So my BurgerFi in Charlottesville has been closed for 6 months. Maybe eventually it's going to reopen, but in the short term, like this is why you can't expect this stock to have a lot of momentum, because it's one of the three components. It's weak versus the current environment with COVID, sadly. Most of the SPACs that I talk about on this channel regularly are SPACs where I do believe in the big idea and I do believe somewhat in the execution plan. Not necessarily in the short term, because a lot of them are pre-revenue and they're not going to ramp up production for years to come. But I do believe in the management team and that they have actually a business plan that somewhat makes sense and has a good chance of being successful. Well, if we go back in time a little bit, you guys can look into HOFV. For those of you that weren't following SPACs back then, right, this is one of the first SPAC merger in 2020 and the biggest failure by far. Well, if you go just through that strategy, look at the big idea and the execution plan, you'll see why this company had no chance. I'm not going to go into a lot of details because it's not really important, but HOFV, you guys can look into it. The big idea was very bad, right? Way too small of a market, and then the execution plan was terrible also. Now, another company that you guys might not know of, but is very relevant right now, is Global Blue Group, ticker symbol GB. This is a company that had a lot of trouble merging. A lot of people voted against it because people believe that the company was overvalued. They were underwritten before the big recession, right? Before the big market crash. So the merger was during the crash. So people were like, well, why would we be paying pre-crash prices for this company? But the thing is that if you analyze it, right, maybe you're not a huge fan of the actual company, but the company had revenues, the company has growth to it. So because of that, there is a value attached to it, right? There's only so much it can drop before it hits a support. Same for Multiplan. A lot of you are invested in this company and you've been kind of wondering, well, when is it going to stop dropping? Well, again, Multiplan, whether you're enthusiastic about the current situation or not, Multiplan is a company that has value, so it will stop dropping at some point, and it's not going to be a HOV situation. As you guys can see, the drop is starting to slow down now. It's starting to get its footing. So the reason why I'm showing you all of these companies right now is that I want you to go through your portfolio right now, look at your positions, and ask yourself, is this a big idea that you believe in? And is this an execution plan? Like, do you like the business model? Are you pretty confident that they're going to execute on it? Is it going to be a multi-plan scenario that's going to stop dropping at $8? Or is it going to be a HOV type situation that's going to drop to $2? This is going to make a big difference, and then we'll go on to the next level of your thinking, which is going to be, are you a time in the market investor or are you a timing the market investor? So the entire crisis with SPACs comes down to the question, are you going to be able to sleep at night and withstand that short-term volatility? If it's a stock that you like, the big idea and the execution plan, are you going to be able to hold it for a few years and not look at it every day and panic? Because it's very, very easy to say, hey, I'm a long-term buy and hold investor. I believe in this company. We saw this with HYLN. When the stock goes from $18 to $58, right? Everyone's saying, "Oh yeah, I'm a buy and hold investor. I'm going to hold the stock 5 years. Everything is great." But when it comes back down and now it's at $20, everyone is starting to panic and second guess themselves. So you have to ask yourself, which kind of investor are you? Are you going to be able to set aside those short-term second guessing yourself if the SPAC goes to $8 after it merges? Right? This is Facebook. This exemplifies the time in the market strategy. You could have bought this stock anytime in the past few years and you would be up right now. You could have bought at the peak, you'd still be up, except if you bought like just recently when it was above $300. But you guys get the idea. Like anytime, basically, you could have bought it, whether it's at the high or the low. The reason why is stocks over time tend to go up about 10-12% on average, like especially the strong ones. Facebook, everyone thinks is a great big idea and has a great execution plan. So over time, if you can set it aside and not panic sell, not look at it every day and, oh my gosh, it dropped 2%, you're going to do really well. So as you go through your SPAC portfolio, if it's a stock that you believe in and you know that you have the discipline not to panic too much, and you're not going to be like me when I was a newbie investor and I lost $7,000 one day and my stomach literally dropped and I thought I had an ulcer. If you're not like that, then use a time in the market strategy. Just stop focusing on the SPAC price every day. But if you're like me and you're more of an active investor and you're looking to maximize your gains and minimize your losses, well, now might actually be a good time to get out of some of the SPACs. I mean, I'm not going to lie, right now, most of them, as you guys know, are in a downtrend. Uh, Basically, what I do, you guys know this, some of you have watched my videos. I try to find when the stock is oversold and when it's overbought. So one of the methods that I use for that is to use the indicators RSI and MACD. I've made a video in the past called how to buy low and sell high using RSI and MACD indicators. If you guys haven't watched it, I strongly encourage you to go do so. It's really going to help you get better at detecting the valleys and the peaks for a stock, and in the process getting better at making good purchases and exiting the stocks when it's overheated. So that's how I was able to get out of HYLN when the warrants were at $22, FMCI Tattooed Chef when it was at 22, right now it's at 17, right? So I saved about 20-25% already on that. And then LCA at 17. So it's not to give myself a pat in the back on the back, it's just to tell you guys that there are techniques that you can learn how to get better at detecting this and just saving more money. So if we answer the question from the beginning of the video, is now a good time to get out of SPACs? In a lot of cases, temporarily, I would say that yes. I mean, there are a lot of SPACs that are very vulnerable right now that are going to drop probably below $10, including some of my favorite ones. So what we're going to do here, what I'm going to do is keep monitoring them and re-entering my positions when they're at a better price, when they've bottomed out, and then I'll get a better cost basis. So I hope this helped you a little bit. I wish the video was a little bit more positive, but it's just a bloodbath when it comes to the SPACs right now. So it is what it is. We have to deal with it. I'll see you guys tomorrow. I'm going to probably be talking about Tattooed Chef unless there are other big news. Tattooed Chef is a company that's dropping tremendously right now, and that is going to be a great, great opportunity when it stabilizes. I found something new today I'm very excited about. So I'll see you guys tomorrow. Thanks for watching.